I'm Julia Cordova, and welcome to the Place Your Trades Network. We are the network that focuses on trading daily options using CME Group's event contracts to trade E-mini S&P, NASDAQ, Dow, Russell 2000, gold, silver, euro, crude oil, natural gas, and copper. Today, I hope we have a great show for you. It's just me. I'm going to be talking about what levels that I'm looking for in the indices and in metals this FOMC week. I'm going to keep it really short. And sweet, hopefully, and hopefully it'll be really useful to you. Today's broadcast is brought to you by Tradeabate, which has built a custom app dedicated to trading CME Group event contracts. That's what we're all using at Place Your Trades. The PYT team is going to be in Las Vegas at the Money Show on April 24th to 26th. So I hope to see you there. Okay. All right, I have got up my ES weekly futures chart right now. And I just want to make the point that, a lot of people, and especially me, when I first started trading, I didn't want to look at the weekly charts. I had no interest in them. I was just wanting to focus on daily and 5-minute. But I find that at the longer I traded, the more I was much more interested in seeing the weekly versus any other time frame, because then you see from a big picture where we are. So just first of all, I'm going to get rid of all of my lines here. Okay, so this is just the plain candles weekly chart ES, right? So you can see what happened here. We went into the beginning of the year, and then we've just sort of been stair stepping down to lower lows and lower highs, right? Over and over again. So now, though, the most recent price action, and I kind of just look for these things as they come, is that potentially we might be in some sort of pennant formation. And that really just means that we're getting more and more condensed in the price movement. And that means that a bigger move, whichever way it is coming. And so one other thing I like to do is I like to mark off gaps, especially on the weekly, because I find them very useful. And I'll just say there is an unfilled gap here. I think most people have talked about it at the 4220 area. So that's still to go. And then I just want to point out that, a lot of people sometimes criticize my work because there's a lot of lines on there. I've actually, got to tell you, took some lines off of this just for you today because I didn't want to show too much information, and I just wanted to keep it short and sweet. But the way that I trade too, that may be a little bit different from what you're used to, is I trade. That means that I find a line that somewhere on the chart that works well, and then I move it around. And as soon as I'm convinced that that line is a good line, I use it over and over again. So I look for a few up lines, I look for a few down lines, and then I place them strategically on my chart. There's really no magic there other than picking really good slopes. And the way that I define slopes isn't just the wick of the candle, but it's both the wick of the candle and the closes or the opens. I want the number of times that line was important. It doesn't have to be exact, it has to be important. Okay, so with all that said, I'm going to zoom in here to where we are this week. Okay, so last week you can see that if we are indeed in this pennant formation, we tested the bottom of it here, and now we're trying to recover a little bit. So I have got this week 3971.5 as my yay or nay pivot. That is the most important value that I'm looking at this week. Above 3970, good. Below, not good, right? And you can see we opened pretty much right under it. And then, when we gapped up, we had wild price action last night. We gapped up, and then we went up, and then we went down, and we went all around. So right now we're sort of sitting right above it. Now, the other thing that I like to include on my weekly charts, and this people sometimes say, but that's weird. It's not weird. Is the MAs. I look at the 9, the 20, and the 50 MAs. I look at others too, right? But on the weekly, to me, those are the important ones. Above the 20 MA is usually bullish. Below the 20 MA is not. Now, if there's chop, right, it can go either way. But if you're trending, that's sort of the way to look at it. So here's what we're looking at. Where we are right now is we are above this 3971.5, and we just got above the 50 MA And then I told my group earlier that if we got above this 50 MA, I thought we would hit the 20 MA. So the 20 MA right now is 3992.75. So that's sort of what I'm looking at, just very, very short term. I think we probably will get up here. And then I'm not sure how far up we'll travel before FOMC. But the other thing that I like to do is if there's a strong one-way movement, one way or the other, is that I will fade the initial move, because usually, we've gotten till Wednesday, right, at 2 o'clock. And usually if price action has gotten cuckoo one way or the other, it will revert at least somewhat before the actual Fed meeting. So that is the way that I'm trading this week. I'm also looking at 4010 as the midline of this pennant. It's been important for me for some number of weeks. It's just a very important level overall. And I will tell you also that horizontal levels for me are a lot more important than any kind of slope. So anytime I have a horizontal level, I pay close attention to it. And also what's happening this week is you can see 4030 is really strong resistance. That is going to be approximately, and these things change, but it'll be approximately the intersection between one of my trend lines and the 9 MA. So that's big. And then above 4048, potentially maybe we'll go to the moon, the edge of this, which is 4100 or so. Okay. So, and let me drill down to the daily now. All right. So make this big. This is my ES daily, right? Everybody's is a little different, but I did draw this shape out just so that I could monitor the bottom of what could potentially be either an up channel or a little mini bear flag. Either way is possible. Last night, it looked like it might be bear flaggy, but I always try and wait until the close of the candle to really know. But anyway, so we've got this. And, of course, it's not perfect. We've got this general channel going downwards for ES. And last night we came back and almost tested one of my other slopes that I really love. And also I will say, remember how I said that horizontal lines are more important than slopes? Well, the lower the slope or the less the slope is, to me, the more important it is. So I was watching 3894.75 last night. Didn't quite get there, but almost, so close. And then right now we're sort of breaking above this channel line, which is 3968.25. Very, very close to our 3971, right? Right. So that 3970 area, that's so important. Can't stress it enough. Super important. Now, if we get above this 4019 on the daily, that's going to, and look at this, we're above the 9, we're above the 20, we're not yet above the 50. So now if we can get above this 4019, that's potentially going to be a fakey breaky, right? Or what's going to look like it did the bear fakey breaky. I'll give it to myself. But if we can get above this 4019, then I think we're going to go higher and probably close this gap up in here. So this other gap. Okay. The gap before the gap. Yes. All right. So let's then look at NASDAQ. This is the weekly for the NASDAQ. And I should make the point that last week was kind of weird. When I was doing my weekend summary, I just made a note that NASDAQ was like fireworks and moonbeams and unicorns. ES was okay. And RTY looked like poo, right? So it was like the 3 different options that, if you're trying to figure out could possibly happen the next week, it was all over the board. But anyway, so far, what we've done is we've retraced just a little bit of our gains for NQ. And now we're sort of in the middle of outer space from a weekly perspective. But that's okay, right? As long as you have some good daily values to watch. So from a daily perspective, I'm looking at this channel here. I was looking for a back test of 12564.50, which we got. And then I'm going to say that if we can get above this 12744.25, that will be a breakout for me on the daily chart. And I think we'll head up here, right? Because there's just not a lot weekly. There's not a lot daily for NQ. So I feel like that's really important to watch. So above 12744.25. 4.25 on the daily. Now let's look at RTY. All right, this is my weekly chart for RTY. You can see last night we came down and just touched these, I believe it was the COVID lows at 1715, and then shot back up. And so far, it looks to me like conversely, it seems like it's the strongest performing indices this week, at least compared to last week, right? So now it's like all flipped around. But anyway, I'm watching 1734.2 as the lower value on RTY, and then it'll start to look much more, and you can see that it failed, by the way. It had a bull flag here that it went through the bottom of, and that's always super bearish whenever that happens. The same way when I was talking about that if that bear flag fails over in over in ES, then it's super bullish, right? Right. Okay, so let me go ahead and look at the daily here. So the daily is just, I mean, it looked really bad on Friday. I actually ended up going long over the weekend RTY, and it was one of those things like I was like, oh no, am I like screwed? But I was not, because of course of the gap up and so forth. But it is something where, of course, because it's so wiggly, you want to take profits. But anyway, I was watching the 1708.7, which was a previous gap. That's why I keep them on all my charts. And now I'm looking, if we're above 1765, then I am looking at 1791.4. Now before, this was one of those mini bear flags that once we broke down from it here, I calculated the measured move to be 1824.1. Then on Thursday, a few weeks ago, we hit that, and then Friday went right through it. But this is the kind of measured move that I will keep on my chart as a horizontal line. Why? Because any kind of measured move I find is very important moving forward. It almost always uses those measured moves again. So I will label them as what they were, daily bear flag, right? From here, and then I will keep it on my chart so I can watch it. Then it will be resistance if we can get through this 1791.4. All right, let's look at gold. All right, this is my gold weekly chart. Again, I took some of these lines off. You can see that last week, after this hammer candle, sorry, in the previous week, we gapped up, and then we didn't even take a look back. We weren't even concerned with this hammer candle. We just went pretty much straight up last week. This week, we're still, even though the candle looks red right now, it's still above where we closed last week. Okay, so there's still some momentum going forward. It looks bad right now, but it's also only Monday. And one thing that I find is if you look at a candle and you think, okay, bearish on a Monday and it's a weekly candle, you could really be off. Okay, but anyway, I'm watching 1953.8 as my support there, and I'm watching 2031.2 as my weekly resistance for gold. Now I also look at the 4-hour chart for gold, and we formed a pennant last week that we broke out from, and then one of my lines I take from way back, we've so far hit as resistance here. I'm going to give you the current information. So we have about 2.5 hours left to go right now, and I have this resistance as 1973.3, which it's on right now. It's also on the 9 MA of the 4-hour. So usually, of course, these upside down pins people think are very bearish, and they can be, but it can be chopped out, right? This upside down pin got chopped out, and then whoop. So we'll see what happens. I'll see if there's any kind of formation here. I try and wait until I see something before I say something, rather than just celebrate something up or down. So I'll see if this blob turns into something that we can use for our trading, and if so, I will share it on Twitter. You can see here also there was some potential divergence here across the board, but I don't think too much of it if in between it had some chop. That if the more chop there is in between the divergence, the less I pay attention to it in general. Okay, let's look at silver. All right, this is the weekly chart, my weekly chart for silver. You can see it did the exact same thing that gold did in the previous week, gapped up, took a little bit of a whatever, and then whoop, right to its 20 MA. it's still above where it closed last week. It's back tested my weekly key this week, which is 22.345. And so far it's bounced up from that. So I think we're due for some continuation this week in metals. We'll see, but I'm looking at 23.065 as the next resistance. And then if we can get above this 23.985, you can see. So what I do is I mark off previous gaps, right? But then once they fill, I turn it into a dotted line. So I still know that they're there. Why? Because even if they're filled, the more dotted lines that are in one particular area, that means that there is some band of support / resistance here, right? So, these gaps came from this area, right? And you can see it here that we had some chop in that. So that's important. But above 23.985, and I think potentially that silver squeeze hashtag is going to go zoom again. We already made an attempt here. This does not look like a high to me in any way, shape, or form. There's a lot of wicks, sure. So does it look like resistance? Yes, it does. But it doesn't look like a well-defined good high to me. So I think we've still got some action. Something like this might look like a high where there's a huge wick and then coming back down. Sure, that looks like a high. This does not look like a high to me. Doesn't mean it won't come back down and then go, but it just means that this level is likely to be broken, the timing of which we don't know. But again, if it can get above 23.985, I think it'll be broken sooner rather than later. Let me look at the smaller time frame charts here, the daily. So originally there was this gap here that I thought, okay, if it hadn't had tried to break out another time, I thought that it would come up from this gap. But because it did try to break out and failed, then it actually went right through this gap. It didn't quite get to where I wanted to accumulate. Of course it didn't, right? But I was looking at this 19.45 area to the high 19s to accumulate. Didn't quite get there. And that's actually a sign of strength. So now the longer it can hold above all of the breakout levels, my weekly key, for example, 22.345, the more convinced I'll be that it's actually changed. And this gap will not get filled at least for a little bit of time. So we'll see how that works out. And really, that's it. So I hope this was useful to you. I hope my levels helped you in some way. I hope anything I said about how I chart and how I think of things helped you in some way. And I hope you have a fantastic trading week. Okay, follow me, Cordova Trades, and also place your trades on Twitter. And I wish you a wonderful week. Bye.